Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's update our view on the euro currency. So you can see that despite the market starts to look more bearish, as we said recently, due to this recent drop, yes, it was possible to show some upside bounce. So actually, as you know, the data of the real estate market in the United States was not really positive because the new building permission has dropped for 6%, while it were expected about some minor increase, so decimal point, 3 decimal point of the percent. Other statements of the housing starts and also was not really impressive. Oppositely to United States and European Union, the CPI index has shown a bit better numbers. Just for 1 decimal point, it was better than expected. But what is more particular interesting here is that mostly the recent action within 2 sessions stands due to the Treasury bonds yields. So the yields in the United States has dropped. The anticipation of the rate cut and some other old stories come to surface again. So I'm speaking on the China negotiations and so on. So investors again resurrect this topic and starts to use it for explaining the overall situation on the market. As a result, you can see that market has shown minor bounce. Yesterday, it's also a report from the IMF, and they said that dollar currently is overvalued for 6-12%. So this also has made psychological impact on the market, and as you can see, it has led to some minor bounce. At the same time, guys, this bounce looks not really very impressive, as you understand. So that's just could be treated as a retracement inside of this leg down. And currently we need to understand, so today's task is to understand whether we will get kind of the A, B, C, D upward direction that we discussed yesterday, although chances for that are not really very significant, and we said they diminished significantly yesterday, but still, theoretically it is still possible because market stands above these lows, and it could form A, B, C, D pattern. And our task is to understand how realistic this suggestion is. Meantime, following our recent analysis that we have prepared yesterday, we still keep an eye on this possible ABCD pattern with the OP and 1060 target, just because this recent drop could be the starting moment of the downward continuation. And that could be just technical minor bounce. On the 4-hour time frame chart, we do not have something really specific, something interesting. So yes, market is bouncing up from the XOP target. The minimum target of the Gartner's triple to buy is already done, because as you know, this pattern has to reach approximately 30% of the whole downward action, and this is already done. So that's why if even market turns down here, it will not mean that Gartner's triple to buy has failed. So actually it has reached the minimal target, but nothing else we have on the 4-hour time frame chart. No divergences, no grabbers, no additional patterns to this one. Currently this action looks like the retracement, and for us today's particularly interesting will be hourly chart, because here we have some points that should let us understand how to treat this upward action, whether this retracement or this is new upward leg on a daily right to the 1320 area. And to understand this, we will keep an eye on the extensions. So first of all, take a look. We have initial extension of this A, B, C bottom. By the way, as we said, yesterday it was very good. As you can see, double repo buying pattern. So thrust down, close above the 3x3, close below, close above again, and then market action shows upward action. The double repo already has hit minimal target. So about the expansions. So our initial extension stands here as A, B, C bottom. It hits OP, minor retracement. Now it comes to XOP. XOP stands at 1244 and slightly below the major 618 resistance at 1250. Another pattern that we have here is larger A, B, C bottom, D or OP target that creates an agreement with the 1250. So it means that for us, the 1245, 1251, this will be an area that will let us to understand how correctly treat this action. By the external view, it seems that this mostly looks like retracement. So gradual action, no significant accelerations, all upside candles approximately the same length. Accurate harmonic pullbacks here stands on the market. So currently, this looks like the pullback, looks like the retracement, because we do not see something that sort. This is some kind of direction, some fast acceleration. Also, guys, take a look that to the left, you could see this consolidation. So that its previous will be low, since will be the natural resistance for the market right now. So it stands at the same area. That being said, at 1245, 1251, it's an area that should clarify what this action is. So the breakout to the upside of this area will mean that on the daily, on the 4-hour time frame chart, indeed, we could get this A, B, C, D pattern. So I will show you. This will be A, B leg, and that will be C, D leg. So maybe it will be even slightly greater. But that will be kind of the ABCD action if market will move above the area that we talked about. Also, guys, take a look. That will also be the weekly pivot point. Conclusion is as follows. So if you would like to take the short position, you could keep an eye on this area. As soon as market will hit these targets and will flirt around the 1250, you could maybe drop your time frame more to the 15-minute chart and trying to search some bearish patterns there. Maybe something will be formed. Or just use this area trying to take the short position with a relatively near standing stop order, because it will be clear very soon. If market will break it up and starts moving higher, it will tell you that probably this is not just a retracement but something greater. Conversely, for the bulls, you need to wait and see the breakout of this area. If you would like to trade euro currency on the long side with anticipation of this ABCD pattern that we have talked about. My personal opinion, I'm somehow more gravitate to the bearish view because, well, this action and the background, fundamental background that we have looks weak, and the price action here doesn't show some really clear bullish view. So this looks not really very impressive, especially on the 4-hour time frame chart. It's very gradual, slow, many candles with this. Actually, you can see that here market hits approximately the same area within just 1-2 candles, but here we have the 6 candles on the upside. It's much slower action, and that makes me have some doubts on the real perspective of the upward action. And I gravitate more to the opinion that market probably turns down from this area. It's more probable, at least currently. So that is what we see right now in the euro. Let's see what we will get.